All right, we're back on the halftime report. All right, let's do this. Questions, Q&A period begins. John from Ontario has a question for Farmer Jim. Is now a good time to initiate a position in ArcelorMittal?
John, this is my favorite part of the program. I hate to say it, that's not my favorite question. Take a deep breath, take a walk around the block. Don't buy it right now. I see the value. I get it. I understand why you're asking the question. It goes down day after day. It's off a third in a month. It's off 50% in 9 months. Just wait for it to start going up, okay? Just deep breath. Thank you.
All you got to do is call him Farmer Jim. He gets a little excited, right?
In all seriousness, John, thank you for the question. I'm not being obnoxious. I'm just being direct.
Okay. Joe, for you. Nathan in Pennsylvania, thanks for the question. Any interest in Baba?
Yeah, a lot of interest in Baba. The problem is this is a high-quality name that's lost its momentum. So domestic revenue's up 45%. Online revenue was strong. It looks like it bottomed in January. Obviously, the headline related to the trade tensions, it's the reasoning behind the loss of momentum. But yeah, I think at 160-ish, I think you can buy Baba. If you don't want to take full exposure to Baba, you go K-Web.
Okay. Weiss, for you, from Mike in Virginia, what about Fitbit?
So you go to him for farm stuff, you come to me for people that are in good shape. I get it. Look, Fitbit, I own an Apple Watch.
Don't flatter yourself.
I own an Apple Watch, and to me, it's so far ahead of Fitbit that I don't know why you'd want to own a Fitbit watch, except for the fact it's so much cheaper. So they came out, they beat on the top line. Earnings growth is actually pretty decent. It's about 10, 12%. But the bottom line, they're losing money. You just can't own a company that's losing money. Ultimately, could they be a takeout target? Yes, but that's a bad reason to own a stock.
All you need is a mirror. You don't even need a Fitbit.
Exactly right.
Okay, next up.
When you're that shredded.
Yeah. See how agreeable I am? Exactly right, Joe.
Next up, Scott in Wilmington. Scott in Wilmington for Bryn. Maybe it should be for Steve. Allergan.
Thanks, Scott. Yeah.
Yes, those Botox treatments have been working well.
I don't like needles.
Yeah, thanks, Scott. We like Allergan. I think down here below 140, the stock has a lot of negative sentiment, but interestingly enough, in David Tepper's most recent 13F, he doubled his holdings in Allergan from about 1.5 to a little over 3 million. He's wanting to separate the CEO and chairman. There is negative sentiment, but we think from a valuation type play, we like Allergan anywhere below 140, which is where it is right now.
You don't still own this, do you? Or you do?
No,
I can't remember. You've become beyond frustrated.
Yeah, look, I think Dave's idea is the right idea. They should separate. This company just hasn't performed, period. And I don't believe there's any reason to ever have the CEO and the chairman of the board be the same person.